when the petrodollar system has been, the standard for keeping the dollar the global, or reserve currency, the US has gone to war and like killed millions of people to defend that. There are cases where, the US government, or rather US empire, is willing to go to extreme lengths to defend the dollar. So the idea that they would just sit idly by and just like let dollarization happen without having some sort of plan in the works, especially knowing that they couldn't keep this going indefinitely and that the world was going to move at some point to a post-oil economy. I think it's important to keep in mind that these people have been very serious and played very dirty.
The recent speculation surrounding the petrodollar agreement between Saudi Arabia and the US has sparked debate over its validity. While some reports suggest the deal is ending, others dismiss this as fake news. There's even speculation that such a deal never existed, despite Saudi Arabia conducting most of its oil transactions in US dollars. The rumors gained traction from Chinese social media posts in June, claiming that Riyadh had ended a 50-year agreement with Washington, commonly called the Petrodollar Agreement. The term petrodollars might sound familiar. It refers to US dollars earned by oil-exporting countries through the sale of crude oil, a concept that gained prominence in the mid-1970s. The origins of the petrodollar system date back to 1974, amid an oil crisis in the US. As Bloomberg reported, this crisis was triggered by OPEC sanctions against the US for its support of Israel during the Yom Kippur War. Prices soared, and the US needed a stable oil supply, leading to the agreement with Saudi Arabia to conduct oil transactions in dollars. Whitney Webb, founder of Unlimited Hangout, addresses this issue by highlighting the strength of the US dollar system, which lies in its ability to maintain purchasing power globally despite domestic inflation. This is evident as countries like Argentina turn to stablecoins over their inflating currencies. Whitney views the potential decline of the petrodollar system not as a random event, but as a calculated shift with profound implications. Historically, the US has fiercely defended the dollar's dominance, even resorting to military actions like the 2003 Iraq invasion and 2011 Libya regime change in response to challenges to the petrodollar, underscoring its importance to US economic strategy. Given this history, Whitney suggests that the US will unlikely allow the petrodollar's supremacy to diminish without a fight. As the world moves towards a post-oil economy, the US is expected to implement strategies to maintain its economic influence, possibly through new financial systems and digital currencies. We will present clips from Whitney Webb's interview. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
Well, on the case of Saudi Arabia dumping the petrodollar, you could argue that Mohammed bin Salman for some time has been moving away from the dollar well before that official announcement. Basically, when he came to power, he was trying to move Saudi Arabia to a post-oil economy. He launched his Vision 2030 plan and made overtures there that he was going to try and move Saudi Arabia away from oil and sort of make it a leader in the fourth industrial revolution, including in fintech. And we've also seen like other big actors in Middle Eastern oil specifically, like in the United Arab Emirates, for example, do kind of essentially the same thing. So I think it's something that sort of has been planned for some time. And what's interesting is that MBS, as soon as he came to power and during the Trump administration, was very close to Trump's son-in-law Jared Kushner, who was also we know from emails that have since come out promoting the idea of like stable coins, like an official US dollar stable coin. He actually, I think it was like a Sam Altman blog post that he shared with Steve Mnuchin of the Treasury Department, talking about, the USD coin, which, this is before Circle launched USDC, but interesting. So it's very possible that these discussions were being had like some time ago, that it's not as recent as it may appear to be based on headlines that have been coming out recently. Yeah, all I really want to add to that is that it's important to keep in mind that like when the petrodollar system has been the standard for keeping the dollar the global or reserve currency, the US has gone to war and like killed millions of people to defend that. One of with the likely motivations, obviously there's more than one, but one of the key ones in invading Iraq, I would argue, was the fact that Saddam Hussein, not long before the invasion, had started selling oil in euros instead of dollars and made a lot more money, showing by example to other, other OPEC members that they could make more money selling in different currencies than the dollar. And then, of course, you have the case of Libya in 2011, where Gaddafi was trying to move to a gold-backed currency called the dinar and was selling that to African countries, a lot of which either use dollars or they use, French financial stuff, and that's why you had the U.S. and France essentially lead that regime change operation with devastating consequences for Libya, which used to be the safest country in Africa, then became the most dangerous, and has been cited as an example of or a reason for why immigration got so out of control in Europe after that point. So there are cases where the U.S. government, or rather U.S. empire, is willing to go to extreme lengths to defend the dollar.
What if the traditional financial world could be connected with digital finance? A company named DeFi Technologies, traded under DFTF, did exactly that, and we are just surprised to see how it has revolutionized the investment world. It's the first ever public financial tech company to allow traditional investors to invest and gain exposure to digital assets like cryptocurrencies, blockchain-based projects, and digital finance-based ETFs called exchange-traded products, or ETPs. You might think people could already do it. After all, buying Bitcoin or Ethereum means investing. Well, that's true, but DeFi Technologies did something revolutionary. It made investing in digital finance smoother, more secure, and easier, as is the case in investing in stocks and dividend-paying ETPs. A few years back, we knew this company would boom, and the latest figures prove that. The company has a market cap of about $400 million. So far, the company has generated over $100 million in revenues. In only the first quarter of this year, the company's revenue crossed 13.4 million Canadian dollars, with an operating net income of 5.3 million Canadian dollars. Just recently, the stock price went up by 25% because of DeFi Technologies' crypto trading success. Yes, it is making sounds because this is a one-of-its-kind financial company connecting traditional finance with the digital world. As of now, the stock price is $1.54, but analysts believe that it will soon cross the $3 price target. However, Russell Starr, the head of capital markets, said that $3 or $4 is simply nothing. The reasonable price is $7 or $8, and after that we can then go for estimates for further growth. Listen to what he said.
We're not looking for $3 on this stock or $4, especially in an environment that we're looking at now. We're looking at 8 to 10, which sounds far fetched, but 5, 6, 7 is where we should be trading just on a reasonable comp basis, and that's not me making things up. Just go look at what all of the other crypto companies are trading for, and I'm not sure any of them are profitable. They're trading on revenue multiples.
That's why people like Anthony Pompliano, who is the face of crypto, are shareholders of DeFi Technologies. Anthony even said that it's a stock he would have pitched at the Sohn Conference Foundation, a company that supports and finances cutting-edge projects.
Some of the picks from yesterday's conference included Carpenter Technology Corporation, Natera, European chemicals company Solvay, and cryptocurrency Ethereum. Each of these picks has a solid thesis behind them, but I think they will be drastically outperformed by the stock that I would have pitched yesterday if I was at the conference. My pick would be DeFi Technologies.
But guess what? DeFi Technologies does not need it because it is doing wonders. Just recently, it announced a buyback program. Yes, we have never seen this, but this over $400 million company is doing a buyback. This proves they are loaded with cash, and they want to ensure their shareholders know the stock means solid cash. Interestingly, DeFi Technologies' stock price is currently undervalued, presenting a unique opportunity for investors. This is a rare chance to be part of a groundbreaking project that is set to transform the financial landscape. Investing in DeFi Technologies now is akin to investing in a high-growth company in their early days, providing access to the innovative financial products and decentralized finance solutions of the future. Listen to what Russell Starr, the head of capital markets, said about the real power in DeFi technologies and what price it should be at reasonably.
99% of the world's companies trade at 20 times profits. We are trading at 3 times profits. If you're not getting reasonable valuation from the market on your stock, of course you look at ways to improve that. And if you're trading at 3 times, like I mentioned, someone could pay a 300% premium to us, and it would be a take under relative to any other stock trading in the US. Therein lies the opportunity from an ownership perspective and why you should be buying the stock.
In the same way, DeFi technologies allows investors to invest securely in digital assets, and this is the future. Yet, why is the company undervalued if it's so important? Russell Starr answered that very well.
Well, why are you trading so cheaply? My answer to that is always the same thing. Well, why aren't you buying it? Like, I don't understand. Like, it's almost like people look at a valuation opportunity as a weakness. People have made money over a century in the capital markets finding mispriced equities, getting long them, and making a lot of money. The question you should be asking yourself is, why am I not adding as much as possible to this stock in my portfolio? Because, we were trading at 60 cents, 50 cents, 40 cents. And I was very, very adamant. I was very, very bold. And I just said, look, you guys, like, eventually valuation will always trump mispricing in the markets. We're still there. I would argue, based on where we're guiding and based on what we've told you.
Some countries already know this and are trying to be pioneers. So far, Hong Kong's BTC ETF had their largest inflows in one day, and Australia's BTC ETF is now open. As for the US, the current US President Joe Biden has made it a part of his election campaign to shift toward digital assets. He is more willing than ever to understand digital assets and their communities, which means the United States will soon see a major shift toward cryptocurrencies. And Donald Trump is not coming slow either. He has talked with Bitcoin experts about coming up with a crypto solution for paying US debt of $35 trillion. So, whether Biden or Trump wins, the crypto world will win. Even MasterCard has launched a new feature called Crypto Credential to securely send and receive cryptocurrencies using the MasterCard platform. PayPal has also launched its stablecoin on Solana. Yes, the world is turning to crypto, and those not becoming part of it will miss the opportunity. But if you watched CNBC, you should already know how important DeFi technologies really is. It was just featured on CNBC as a name worth watching. It was EMJ President Eric Jackson's top pick. But how far DeFi technologies has gone to bring the crypto revolution? Well, DeFi Technologies subsidiary Valor Incorporation has recently launched the world's first and only yield-bearing Bitcoin ETP with a 5.65% yield. As for now, it's available for German investors. But things don't stop here. DeFi Technologies subsidiary, Valor Incorporation, also launched the Valor Hedera with a ticker of HBAR, exchange-traded product, in collaboration with the Hashgraph Association, which is a Swiss-based organization focused on empowering a digital future. HBAR is actually the native currency of Hedera and has a market capitalization of $3.1 billion. Even DeFi Technologies acquired Stillman Digital, a leading OTC desk and digital asset liquidity provider. It has over $15 billion in trade volume since 2021, with $4 billion of that occurring in Q1 2024 alone. In the monthly corporate update, the subsidiary, Valor, reported assets under management at a staggering $607 million. Loans of $25 million were also paid. It has been revealed that DeFi Technologies has adopted Bitcoin as its primary treasury reserve asset. It has purchased 110 Bitcoins to initiate this strategy, which will be followed by more Bitcoins purchases to build a solid treasury. Now you can understand why we are talking about DeFi Technologies. Do take advantage of this huge opportunity by clicking the link in the description today.
So the idea that they would just sit idly by and just like let dollarization happen without having some sort of plan in the works especially knowing that they couldn't keep this going indefinitely and that the world was going to move at some point to a post-oil economy. I think it's important to keep in mind that these people have been very serious and played very dirty and created insane instability just to keep the dollar the global reserve currency, because it gives a lot of advantages just to the US. And I fully feel that they intend to keep those advantages, even if it means a different system.
After the devastating economic collapse of 2001, Argentina was trapped in a web of coercive debt for land and debt for resources swaps, strategies that were not unique to Argentina, but were widespread across Latin America. These maneuvers were orchestrated by influential transnational entities, primarily based in the United States, including major Wall Street banks. While Whitney suggests that stablecoins might provide temporary financial relief, they are a superficial remedy for deeper systemic issues. Argentina's current economic woes stem from historical decisions dating back to the military dictatorship of the 1970s and 80s, which set the stage for ongoing cycles of economic instability. The enduring impact of these policies, compounded by the neoliberal agendas of the 1990s under leaders like Carlos Menem, has left Argentina vulnerable to external pressures and interventions, including those of the IMF. The architects behind the economic restructurings of the 1980s and 90s aimed to align Latin American economies more closely with US interests, perpetuating a pattern of dependency and external control that continues to shape Argentina's economic landscape today. To truly address Argentina's challenges, Whitney suggests that a comprehensive approach is necessary, one that acknowledges the profound implications of historical decisions, including the influence of the petrodollar. This approach must prioritize sustainable economic strategies that safeguard national sovereignty, reduce dependency on external actors, and foster long-term stability.
And the big picture is that countries like Argentina and also Lebanon and several countries throughout the world have been targeted by economic warfare for a very long time. Argentina is a very good example. You could argue it began in the 70s and the 80s, and with the economic policy. I mean, when Argentina was a military dictatorship, some of the financial policies they adopted were completely insane. You had a neoliberal in power during the 90s who was very bad for Argentina, in my opinion, Carlos Menem. And then you had their economic collapse in 2001, which, again, you could argue was a direct consequence of a lot of those policies, both of the dictatorship and of Menem's presidency. And then you have the IMF come in and all these other entities. And what they try and do after the 2001 economic collapse is have Argentina engage in things like debt for land swaps, debt for resources swaps. And this has been going on not just in Argentina, but lots of, most of Latin America, arguably, for a very long time. And it's a resource grab.
Yeah.
And, some of what we allude to in this piece and what we hope to allude to in an upcoming reports and a book is that a lot of the people that I've written about and that Mark's written about and that we've written about together are the engineers of that expressly. And by blowing out Latin American debt in the 80s and 90s, it was a way to basically yoke Latin America to the United States or more broadly, a lot of the transnational economic interests that are based in the United States, like Wall Street banks, for example. They engineered a lot of this, and so the situation in Argentina now didn't just come out of nowhere. And obviously, Argentina's central bank has a lot of the blame, but that also didn't happen in a vacuum. Presidents appointed the heads of the central bank that made those policies. And even someone like Milei, who's railed against the Central Bank of Argentina, put a former central bank president in a top post in his cabinet. So these are choices that have been made by politicians. As someone who's been and reported from the ground on Argentina and on Argentinian politics, the corruption there, they just don't even, there's politicians in Argentina that don't even try to hide how corrupt they are. It's just flagrant in some instances in a way I've never experienced anywhere else in the entire world. So I honestly think that what's happening in Argentina, yes, those people may need stable coins because of the current economic situation, but I think it was engineered to be that way. They were engineered into that position.
And then
and who benefits from that? The same people that I would argue created the solution and created the problem.
The US dollar system, fortified by strategic military and economic actions, now confronts new challenges amid emerging economic powers and shifting geopolitics. As the petrodollar system declines, nations turn to diverse financial instruments and digital currencies to assert economic sovereignty in a changing global landscape, shaping complex economic strategies for stability and influence. If you found this message compelling, please share your thoughts in the comments below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Until next time.